Hi, my name's Phil. I like talking about politics, and in this video I'd like to discuss how the UK may be about to lose its last ace in the Brexit saga, namely the capital markets in London. But first, if you'd like to be notified of daily news and politics, please subscribe to the channel and click the bell notification icon. So, back in 2016, Brexiteers were convinced that we held all the cards. They said as much. The German car manufacturing industry would not allow the German government to let us leave without a deal. So we were going to be able to completely take the piss and have our have cake and eat it deal. Only there were two small problems with that logic. One is that there is more than just Germany in the EU. Who'd have thought it? And agreement on a deal had to be agreed by all member states. And two, the German car industry, just like every other German manufacturing industry, said loudly and repeatedly that the integrity of the single market was more important than trade with the UK. They weren't saying, yeah, we can manage without the UK just fine. What they were saying was, but if we had to choose between that and the single market, we'll take the single market if you don't mind. It's much bigger, much more important. Which sort of knackered that idea. But Boris Johnson's ace card was London's financial centre. You know, bear in mind, he may have said in response to Brexit, F business, but he also proudly proclaimed that he was the only one who stood up for the bankers that crashed our economy 12 years ago. Oh, I stood up for these bankers that knackered us, he said. It is huge. The financial centre in London is absolutely enormous, and the EU does depend upon its markets. So, yes, this is going to be about banking, which isn't always the most interesting of subjects, but it is stunningly important to our economy, stunningly important to the Brexit dynamic. And Boris Johnson thinks that he can boost that sector of our economy even more by massive deregulation, albeit at a much greater cost to all of the other sectors in our economy. So it doesn't actually do our country as a whole any good. But the thing is, even on the financial market side of it, I'm not sure long term that he's even going to succeed in boosting that, because the EU are also perfectly well aware of how large and important the UK's financial hub in London is, and their reliance upon it. And they've been saying so this week. And their solution has not been to panic and to give in to Johnson's demands, but to decide to take action. In fact, technically they've been taking action for some years, but it's hastened now, to avoid being reliant upon it. You know, their solution is that they don't look at it and go, oh, we're reliant on this thing, we must do everything we can to keep having access to this thing. It is, we should really stop being reliant on that thing. And apart from anything else, the City of London was never really a bargaining chip. And I think so, you know, to think so is to misunderstand what the problem is, because the EU obviously has rules and regulations regarding its financial markets. With the UK leaving the EU would lose control over those regulations regarding London. Obvious. You know, it's the loss of control that's the problem for the EU, not the loss of access to the market. So agreeing to a deal with the UK doesn't help the EU maintain that control. Unless, of course, the UK agreed to be bound by EU regulations of financial markets. And that was never going to happen. Not when the main impetus for many Conservatives to leave the EU was to abandon EU financial market regulations in the first place. For a lot of them, that was the single point of Brexit, nothing else. And this week, we've been seeing reports, like I say, that the EU is facing up to the prospect of having a massive financial centre on its doorstep. Again, it's not just woken up to this. Because this massive financial centre on its doorstep, not only do they not control it after Brexit, but this market is going to start a race to the bottom on standards. Now, the EU have long said that what they will not agree to is any deal that allows the UK to become a Singapore on the Thames with full access to the single market. So, you know, like I've said before, there's nothing to stop, obviously, Boris Johnson and his government deregulating the City of London. Nothing at all. Nothing to do with the EU, that. So the next best thing is to make sure that at least that doesn't taint the EU's market. So the EU at the moment has a certain reliance on London's financial system. Now, the European Commission made a statement warning about this reliance, and they said that it had to toughen up its own financial regulations in order to avoid going the same way as Johnson is intending to take the UK. Because the issue, of course, will be London deregulates, becomes more competitive, so then other financial centres in the EU will seek to do the same thing in order to compete. So what the EU Commission are proposing is to create a capital markets union. So this would help provide sources of finance for EU-based businesses. At the moment, they're far too reliant on bank loans. Now, the situation has become a little more urgent, of course, due to Brexit. This was always an issue. This was an issue that was touted some time ago. But Brexit has brought it into sharp focus. Certainly, it's what introduced me to the concept. As well as the threat to the economy posed by COVID, that is also, because we're in a situation at the moment in the EU, just like in the UK, where there are businesses based in the EU who need access to support. Well, this capital markets union would be bloody useful for that. So the way it's been described is that rather than having one massive hub in London, the EU, of course, would have lots of much smaller hubs around the block. It's not like there's an obvious replacement for London. Different centres have already been building up and they're going to be here, there and everywhere. So what that means is you then have an urgent need for effective financial supervision in order to stop competition causing that standards race to the bottom, because these different centres are all in different countries. Obviously, those individual countries, the head of government, even in the EU, puts their own national interest first. So what it would mean is you would need to centralise supervision of the capital market. So you'd have a more central European overview rather than individual national government overview, which of course is the sort of centralisation, federalisation as some will call it, that makes Brexiteers' blood run cold. But it is what you're going to have to do. If you're going to have all these different centres, you need to supervise them. And obviously, if you're going to have them all in different countries, they need to be supervised, therefore, by a collective, a group, the EU in this case. So you can't just appoint one country to be the watchkeeper, because they'll look out for their own interests. It has to be a centralised approach. And the emphasis seems to be as well on cryptocurrencies. That's been another driver to this, not just the fear of London lowering its standards. So there is a plan that, for example, would require those issuing cryptocurrencies to accept various rules in return for being permitted to use them in the single market. Now, this is something that, of course, London's financial centre want to steal a march on. It's likely that these digital currencies will become increasingly mainstream. They may well even be the future. There'll be many people who think, well, of course it will be the future eventually. And possibly the not very distant future. And our financial centre in London was, well, it still is, a genuinely powerful asset in our baffling fight for global isolation. Much of our manufacturing is completely knackered without being part of the single market. Similarly, our farming is buggered as well. But our financial sector is absolutely huge and there's a huge amount of reliance on it. It's not an easy thing for the rest of the world to just turn its back on. It has genuine international clout. And it is something that is absolutely a strength. But Boris Johnson saw it as an opportunity to make the same mistake that all Conservatives seem to make. If you deregulate an industry, you make it more competitive, goes the litany there. Except, of course, what you actually do is just make it more volatile. Let us not forget that the banking crisis of 2008 could have been prevented with more robust regulation. And the impact could have been even worse with the sort of large-scale deregulation favoured by the Conservatives. More recently, the EU are wary of the Wirecard failure. So this was an £18 billion company that went completely bust, just overnight. There was a load of money that they were supposed to have that nobody could find. And at a certain point, someone had to admit there's like £2 billion here. We don't know where it is. What do you mean you don't know where it is? We don't know where it is. So basically, we don't know what you're worth, so you're worth nothing. That's how these things work. It's like Europe's Enron, isn't it? And so yet again, people are now, in the wake of that, asking for more regulation to prevent these seismic shocks to financial markets happening. And it's also creating an argument that centralised EU oversight is, of course, not subject to dodgy deals in the same way as national oversight can be. National governments, ministers, heads of government, can be explained, well, give us a light touch, we make you lots of money, all the rest of it. Or it might just be straight up bribery and corruption, who knows? But it's much more difficult with an EU-wide approach. It's much more difficult to corrupt the EU than it is an individual government, because there are so many others looking in on it. How do you really bribe the whole EU? Now, what it could mean for London is that the EU, if member states agree to pursue these proposals, are likely to move away from the UK's capital markets and look towards bolstering their own in order to maintain control and avoid those shocks, to the system, obviously, when a light touch encourages greedy capitalists to go a little bit too far. And that in turn would mean that if Boris Johnson does forge ahead with his planned deregulation of the City of London, then the currently largest financial hub in Europe could suddenly be persona non grata in Europe as well, because it will then not meet the rules of the single market. So you get the same problem is going to hit lots of other aspects of our economy. If we cannot meet the rules to engage with the single market, we won't have access. This will also take place for financial services as well. Boris Johnson wants to massively deregulate. If the EU puts in much more robust regulation, then all of a sudden it's like, well, you can't use London because they don't meet our standards. So then they won't be able to trade at all. Of course, if the UK was still in the EU, we could easily block such a move as not being in our interest because we'd be a member state and have the power to do that. But we're not still in the EU, and so we can't. So there we are. Those are my thoughts. Let me know yours in the comments below. Hope you found the video interesting. If you did, don't forget to click the like button. And if you'd like to support the Patreon, blah, blah. So there we are. Those are my thoughts. I hope you found the video interesting. It was banking, but still. If you did, don't forget to click the like button. And if you'd like to support the channel further, please also click the Patreon link for details. And until next time, I'll see you later.